Hey, it's Rav, and welcome to the Everyday Investor TV show, the show that teaches you how to make money investing in real estate, investing in mortgages, investing, whether it's stocks, it could be anything. And remember, whenever you're faced with any type of investment, you always want to ask 4 questions. 1, what is the return on investment? 2, when do I get that return? 3, what is minimum investment amount that's needed? And 4, what is the risk? What is the downside? Super excited about today's show. We're going to be learning how we can make money. Wait for it. We'll be right back. On today's episode, we're going to be talking to our good friend Nick. He is the co-founder of Rockstar Real Estate, specializing in helping people make money investing.
We focus on the mom and pop investor, the person just getting started, doesn't know where to go, wants their hand held, looking for information. So that's really where it comes from. And then I guess what we've tried to do is really have a platform for them where they can tap into it and get the access to everything they need.
Hey guys, Omar Khan here from Theta Trading with a weekly market update. Now, what I want to talk about is something called the January effect. As goes January, tends to go the rest of the year. So how have we done so far in January? Well, the Dow Jones is up 1.3%. The S&P is up 1.7%. The NASDAQ is up 1.0%. So we've had a pretty good start to the year. The TSX has lagged a bit. It's up only 0.7%. Now, we are in a seasonally favorable period of time. The stock market tends to do well from October to May. And this is also an election year. So we hope that the rest of the year does well. Now, some recent data that has come out is we just had an inflationary report in Canada indicating inflation has gone down to 2.9%. Why is that important? Because as soon as it gets to that 2% number, 2.5%, the Bank of Canada can finally start cutting rates. And that's good for the stock market. It's good for the real estate market. Hopefully the economy doesn't fall apart too fast, too quickly. But good start to the year so far. February is not the best month for the stock market. We're starting to see a little bit of weakness, but we think that the stock market going into an election year, like I was saying, in the United States is probably going to do quite well. But a lot of that is going to be dependent on how other inflationary data comes out and how quickly we can start getting interest rate cuts here in Canada. Until next week, see you guys.
Hey, it's Rav. Welcome back to Everyday Investor. I'm sitting with my friend Nick. Nick, thanks so much for being on the show with me. It's been a while since you've been on the show. You've been really busy. You and your brother, I don't know how many people that you've educated, but you have an education platform. Really love what you're doing. I have friends that are part of it and, just making money, investing slow and steady. But talk a little bit about Rockstar Real Estate because, you and Tom, your brother, you guys had, I guess you kind of started a lot earlier than Tom. He was in the corporate IT kind of world, and maybe he saw what you were doing, or, he says he wasn't that happy, even though he's making some good bucks. But kind of take us back to Nick and Tom starting Rockstar Real Estate, an investment brokerage that helps investors, so on and so forth. So kind of take us, to how it got started and kind of where we are today.
Look, we got our real estate license. This was a number of years ago, and I'm older than I care to admit. All right, and I have a few little extra hairs in my head than you, but I'm not beating you by many, right? But we've been at this game for a while, and we got our real estate license at that time because there wasn't all this access to data online. So at that time when we first started investing, I was 21 when I started investing. We thought our real estate licenses were like the magic key to like the secret sauce to finding good deals. So that's why we got them, but they didn't really serve us in that way. And we quickly realized they weren't, but we continued with our investing. And then over time, as we were investing, other people kind of kept asking us like, hey, what were we doing? Can you give us a hand? And that was more friends and family. And then that just grew into something that turned into this business. And we, initially we just were with another brokerage. We started there. Our first office was literally there. It was the cheapest one we could find at that brokerage. It was their old storage room closet. There was no windows or anything. We were on our hands and knees, like licking envelopes for marketing and things like that. And then we just kind of grew over time. We were told that at that time we were told that what we were doing was not smart. We should not work with investors. In real estate, you needed to list to last, and that's the only way we were going to make it. And we just said, well, that doesn't really make sense to us. We kind of like investing. That's us. That's true to ourselves. So let's just go down this path. And then ultimately we left that brokerage and just started our own because of that. And then, it's just grown from there. I mean, look, I'm skipping out many years and a lot of ups and downs and challenges, but yeah, that's how it started. I mean, we were investors, and then we just wanted to work with other investors because we felt that owning an asset base in the way our economy is structured was something that allowed us options in our lives. And that's what we wanted to help people do. That's what we were doing. We felt that was good for ourselves, and we just started sharing that with other people. Some people agreed with us. I'm sure some people didn't, but ultimately that's what led to the business, and that's how it grew.
No, that's fantastic. And, your slogan, your life, your terms, to be able to live life on your own terms. And again, like I say, I know people with your outfit, and so you have the Rockstar brokerage, which you have many realtors there that are primarily focused on helping other investors. But you also have kind of the inner circle. You have the family of people because you're also an education platform, and that's very exciting. And sometimes it's kind of an inclusive group, I'm kind of like, hey, Tom, Nick, what about Rav? Let me in. Let me find out what you're doing and stuff like that. So talk about that, the importance. I mean, you and I both know, hence even the show a little bit. I mean, the show is only 25 minutes with some commercials. So I only get to touch on it. You get to go really in deep when you do your, masterclass weekends or some online teaching. But talk a little bit about, Nick, you were 21 when you got started, which, that's young. And so you learned a lot on your own, but I know you're a big believer in education. So talk about a little bit about the Rockstar kind of inner circle and how does it work? And, because not everybody that you help is a realtor. They're just the common man and woman, the everyday investor, or the everyday person rather, who wants to be the everyday investor.
Yeah, I think that's kind of where we really focus on, is we focus on the mom and pop investor, the person just getting started, doesn't know where to go, wants their hand held, looking for information. So that's really where it comes from. And then I guess what we've tried to do is really have a platform for them where they can tap into it and get the access to everything they need. So we had this vision at one point that we kind of joked about. Do you remember those old Kentucky Fried Chicken restaurants? And they used to have the bucket spinning at the side of the highway. We're like, why can't we be this like one-stop shop for real estate investors, for like residential real estate investors, and we can have like our logo spinning on a sign, and we got this little animated thing doing it. But why can't someone come in and be like, hey, I want combo number 3. And that is like one single family property, one duplex, and, a little bit of registered funds with some sort of like land development deal or something like that. Right. I know, so, and we're like, so that was kind of the idea, this crazy vision that we had. And it's what we try to do here. And, so that's why we have all the different classes, and that's why we do the events. We've always been big believers in everything that we've tried to learn. Whenever we don't know something, what we try to do is we try to look for someone who's done it, that we know has done it successfully, not someone that's just like advertising somewhere. We're like, hey, we're going to go put our trust in this person. We want to know that the results that they've gotten were actually real and successful. And if we can somehow leverage that or pay them, we look at that as like money by speed. So we look like that as well, like we're investing in the process, because why reinvent the wheel? Real estate investing isn't rocket science. If you can find good systems and just take those systems and implement them properly, and they produce repeatable results, that's really all you have to do. And then sometimes, so many of us included with things, something's working and you shy away from it sometimes. You're like, oh, it's working. What about this? And we get the shiny object syndrome and we go into this, or we change something that's working. And then you look back after time, you're like, why the heck did we do that? So, but that's really what the goal is to create this one-stop shop for residential investors where they can get the information they need, they can get the coaching they need, they can get the support because of the large group. And it's not a group of people just like thinking about investing. The events that we have, when we ask people, hey, how many people are like active investors that own properties? Probably about 85% of the people in the room are putting up their hand. saying like, I'm an active local investor here. So that's been pretty cool. That's kind of like a byproduct we never planned on having, but it's been a pretty cool thing just as the company's grown to be able to be a part of. Like, I feel fortunate to be a part of that because I'm learning all the time from the group as well, right?
Yeah, and what are your thoughts, in terms of you said shiny objects, like, talk with Nick a little bit about, like slow, steady, compounding. That's where really the money's made. I mean, I look at you and, you started at 21. You're, as young as you look, you're not 26, 27. You've been doing this for a long, long time, but you've been pretty much doing the same thing. And of course, different things come up, but what's the psychology? Why do we want the newest buzz, the latest great thing? And we don't even know much about it. Just somebody on the internet says it's a good gig,
We get sucked into the grass is always greener, right? There's always more. There's always something better. And we don't have all the details. We don't see behind the curtains, especially in today's world with social media and all these things. It's very easy for people to put on a persona or have something, show something that maybe not actually be reality. And I think it's easy for us to always believe that there's something we don't know or there's something that we're missing. And so, it's been an interesting journey. Like we've gotten accused many times of like, hey guys, we've had people come in here to our offices. We're like, look guys, you don't know how to make money. Like you don't know how to make real money. This is how it works. Like this person's doing this and this and this, or you guys should be doing it like this. And, because we've been doing this for a while now, we've seen a lot of things come and go. We've seen some people just drift off, and we've seen some people chased by authorities, and we're just like, wow, happy we didn't, I guess maybe we do know how to do things a little bit, right? So it's this weird thing. So are there other ways to be doing it? Yeah, but it doesn't mean they're right for you either, or for the person. So like, we've been able to, fortunately, we've been heads down. We stick with what's worked for us. And then we probably do some other things too that maybe we don't share with the investment group as a large, because there's a responsibility too when you're sharing with other people. If it's not a proven system that you're like, you kind of understand the results, to go out and start, saying, oh, this is the next best thing. I guess Tom and I, we have a hesitation around doing that because we just don't feel comfortable with it. Maybe over a prolonged period of time, if we're doing something that we feel comfortable, we might start sharing more of that stuff. But early on, we don't. So I just think it's very easy to get distracted. It's very hard. Consistency is probably one of the most underrated skills in business. And I look at it as a real estate investor, as a business owner, entrepreneur. And I think consistency is one of the most underrated and hardest skills to master. But I think that's where real returns are made. And someone told us very early on, they have a saying that says, they said, it's not about timing the market, it's about time in the market. And that always stuck out with me. And our accountant way back as well shared the similar thing. He goes, guys, I've seen a lot of businesses come and go in my years. And he's like, it's the tortoise that wins the race. They go up, they level off, they recreate their systems because they can't grow anymore based on their systems. And then they increase again, then they level off. But he goes, every time I've seen like this spike, he goes, I see it spike right back down. So a couple of things early on really have stuck with us. And whether right or wrong, that's been our approach since.
Yeah, no, absolutely. I mean, listen, it's with anything. I mean, I look at you and you look like the Incredible Hulk. I mean, it's like it's working out. I'm sure you're not eating French fries all day, every day. But it's slow and steady. It's the penny a day, double it every day. I mean, after 10 days, it's $5. After 20 days, it's like $500. But after 30 days, it's 5 million. Like, I mean, try it sometime if you don't believe me. A penny a day, double it every day for a month. And so it's that compound effect, and the other thing is we have to be careful. We have to dig deeper when something is offered to us. We have to, or in education, like, you're in the education space, you teach people, and thank you for doing that. Education companies pop up all the time. We have to now dig even deeper because you've got the Gary Vaynerchuk's, the Gary V's out there saying, hey, post 2-3 times a day. And people are posting 2-3 times a day. And all of a sudden they look like they're the guru, right? Or they, somebody's ghostwriting a book for them and they look like they're the guru. And people buy into this as opposed to going deeper and deeper and saying, who is this person that's teaching me? Who are these people that I'm investing with? For example, I work with Graybrook, as you know, and land development, and it's a Cadillac in terms of the land developments, but I tell everybody, do your own due diligence, do your own kind of research. So I really appreciate that, Nick. Let's take a quick break, and we come back. I want to know your thoughts on 2024 and, maybe a few questions that every potential or even seasoned investor should ask. Don't go anywhere. We're talking to our good friend Nick from Rockstar Real Estate. Everyday Investor continues in a moment.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rob. Welcome back. Talking to Nick, talking about education and how important it is to be educated, but also to take a deep dive to understand who you're being educated by. Nick, I love having you here on the show with me. It's really hard I find for people to teach something that they're not doing. You know what I mean? Things change all the time, even the investment landscape. And so that's what I really appreciate about you and your brother Tom. You're always learning, you're growing, you're investing. And that's what's been, and again, not just for a few years, for a few decades. And that's what's, where you're able to teach other people. We were talking on the break about our pet peeves. And you were talking, sometimes about how, it's better to be the tortoise. It's better to not necessarily always be or ever be the big shot, walk big, but really we're leveraged to the gills. And you're talking about how you can make a lot of money with simple investments, a few doors, as opposed to somebody bragging about 50, 60, 70 doors. Touch on that a little bit. And there's nothing wrong with having 100 doors, 200 doors. I know that's not what you're saying, but it's not the most important thing. The most important thing is, are you living life on your own terms? And that can come from different ways. So kind of touch on that a little bit in terms of, again, be careful what you're looking at and looking for.
Yeah. Yeah, I think you said it best. I think sometimes for me personally, I'm not a huge fan that in the real estate investing community, often the measuring stick of success is based on number of doors, because there's so many other factors to that. And the example I always use, if someone's got 100 doors, but they're leveraged at 100% or more even, and, they're making no money or they're negative cash flow, and someone's got, one or two triplexes, or, 10 units or 10 doors, but the numbers on those can be way better than this larger portfolio. So I'm like, why are we using the measuring stick of the number of doors? That's kind of what's always bugged me about it. Whereas I feel like to understand a portfolio, you need a lot more details than what the number of doors are. And then I think you said it best, and it's our belief too, is why are you investing in real estate? And maybe there's people that for whatever reason, they don't want that type of portfolio. They want the lifestyle that a smaller portfolio brings, and that allows them to do what they want on their terms. And then isn't that a successful investor? What is the goal that the investor was after to begin with? And does their portfolio allow them to live that lifestyle? If the goal was some sort of lifestyle, then the number of doors is irrelevant, but are they living the lifestyle? Do they match their goal? And that, to me, whatever that is, if that just means that you're going to the cottage for an extra 2 months out of the year and that was the goal, then congratulations. You've hit peak success in real estate because that's what you were after and it got you there. So that's where I was coming from with that.
No, absolutely. Listen, our greatest commodity is time. I mean, what makes me sad, and I, try to share with people as much as possible, is they get into this game for that time. And meanwhile, they're more busy than if they didn't invest in the first place, right? Because they're not doing it right and they don't have the systems that, Rockstar would teach and so on and so forth. But that's the whole goal. No one's trying to busy their life. They want to be able to, maybe perhaps replace a paycheck with some cash flow, for example. Or they're looking for 10, 15, 20 years where they don't really need much cash flow, but they want to grow their capital so that in 15, 20 years, now they can lend it out at 8, 10, 12%, or buy income producing property or whatever the case is. So that's why education is so important, to be able to join a group of people, to have a network, to be educated, so that they can even help you with, okay, if this is what you want to accomplish, if this is where you see yourself in 5 years, well, here's where maybe we can start. So listen, I really appreciate that. I can't let you, we only have a few minutes, I can't let you go without talking about your thoughts on the economy, predominantly here in our wonderful province of Ontario. But what are your thoughts? What are you teaching people right now in your outfit? A lot of people are scared. A lot of people are, regretful. A lot of people, and, I was talking to Sasha from Greybrook about this. It's funny, we understand that things we should look at long-term, but even the market, every 3 months you come up with a report and people base their decisions on, what Walmart is doing based on numbers every 3 months, as opposed to looking at things, long term. So what is, Nick's thoughts here in early 2024? What would you be telling your outfit? What would you be telling your niece, your nephew? What would you be sharing with them?
Yeah, that's a loaded question. So there's a few things. So I agree with what you just said about the long term. I think it's one of the benefits in real estate, even especially for someone like me. So I can be an emotional trader. I'm very good at buying high and selling low. And if anyone wants to lose money on stock investing, I'm the person to come to. I'll give you the next best stock tip. And I think sometimes even with properties, I know that one instance I was standing on the porch of one of our properties with Tom, and I'm like, man, forget this one. Maybe we just get rid of this one. Like, I just don't want to even deal with this, and thank God we didn't. That property has been very successful afterwards. And, the reason we did it is because it wasn't easy. We couldn't log into some portal and just kind of snap our fingers and it's gone. And I think that's one of the benefits of real estate investing. It forces you to be there for the long term. But when you're there for the long term, what we've seen some people is, because they've got themselves in a situation, maybe recently with interest rates hikes and things like that, and getting mortgages. There's a lot of hoops to jump through to get mortgages, as people know as an investor. So some people are holding on too tight. And I feel like sometimes you need to reshuffle the portfolio. And if you've managed to pick up, call it 5 properties, but if it's really squeezing you, or if you're really negative and it's creating problems, you have to see yourself through the short term to enjoy the long term. So there's no harm in reshuffling your portfolio and saying, hey, you know what, this one that's really kind of draining on the portfolio overall, maybe I do cash out of that one and see what happens in the future, or take some of those funds and throw it into these ones to make the whole portfolio perform better. Because, it's not just about the number of properties. You gotta kind of like be comfortable with where you're at as well. And I think we often see that. And as this time has dragged on now with higher rates, and I've talked to more investors in that situation, it's something we're seeing more and more, where people, investors are like, well, I want the asset. Like, I got the asset. I want to hold more assets. And I'm like, well, yeah, but you also got to see yourself through these short-term blips that you kind of got to battle from a cash flow perspective. Like any business, there's cash flow moments and there's business building times as well. So you got to kind of manage that cash flow at the same time. So that's one thing. Can I share one more quick?
Please.
Okay, so one other thing that's very apparent to me, and I think to anyone if they look around, the number of single-family homes being built in Ontario, let's say if we're looking at Ontario, it's across Canada-wide, it's Toronto, it's Ontario, it's everywhere. We're lacking single-family inventory. The number has been trending down for a long time. It's nosediving right now because of the economy. We are lacking single-family homes, not necessarily housing units, because of the multis, the rentals, the condos, those types of things that are going up. And for me, if I'm building an asset base, I know it's slow and boring. We talked about this, but I'm going to want something that's in demand. I don't think people's desire to live in that type of property is going to change. So personally, we look at those, but Tom and I both look at those as kind of like even becoming a little bit more appealing, even at the price points. But it's because we have some flexibility there. In some ways, we're looking at the single family market like the land grab was decades ago when people were buying land in the suburbs of Toronto, because you can take if you get an older lot, a decent sized lot, you can put 2, 3, maybe 4 units on it all of a sudden. And then it dramatically changes the numbers of the investment from an income perspective and the value of it as you've driven up the income. So I think it's just a trend to watch. I don't think it's going to reverse anytime soon. And if population growth continues and single family starts don't change, those things are going to be, the demand for those is going to remain quite strong over the long term.
Yeah, thank you for sharing that. And you know, and I know you're a believer of this. I mean, again, we're getting older, Nick, and you know, we got.
You keep saying that, Rav. We got to stop with that older.
And, you know, but what comes with that is, you know, our kids and thinking about them, and then our aging parents, and you know. We got to protect our brains. We got to protect our brain health. We've got to invest in brain health. And really what I'm getting at is we've got to be able to sleep at night in peace. It's not worth it. And hence to your point, your first point, you know, maybe we got to sell a property because it's squeezing us too much and we can't get our proper sleep and we're not a great, you know, husband or dad or son or brother or whatever the case is. And so again, the number one rule I share with people when it comes to investing is whatever you do, make sure you can sleep at night, because you made a point, a great point. Not every investment is for everyone, right? Not every investment is for every single person. What you may invest in, you know, might cause me extreme anxiety, and vice versa. So, you know, I really appreciate you sharing that. We've got a minute left, Nick. What would kind of be your closing thoughts here? Like, what is Nick and Tom doing right now? What are you investing in? And I appreciate you saying, you know, there's other things that you do that you don't necessarily share with your students or those that are part of, you know, the inner circle at Rockstar, because you have a conscience. I love that. You have a conscience. I mean, you know, there's nothing wrong with taking a small percentage of your portfolio and whatever, whether it's in the crypto space, whether it's in the stock space, whether it's putting it on, you know, red at the roulette table. There's nothing wrong with doing that. But in terms of what you teach, slow and steady, great returns, looking at the return on investment, so on and so forth. So with that said, what is Nick and Tom doing right now, early 2024? You just mentioned one of the things. You're looking at single family homes because you can do a lot to create the highest and best use for those. What else?
Look, we're old school investors. Okay, so our belief in investing isn't so much about investing in trading. We've always been people that believe that asset ownership in the way our financial system is structured, in an inflation-based financial system where they keep printing more dollars, what we've seen over the last number of decades and throughout history really is those dollars go into assets, and good assets will then increase in the price tag will increase as, you know, bad assets or incomes lag. And we've seen that in multiple different spaces, not just real estate recently. So our goal is to own assets, to act as a financial base underneath us over the medium and long term of our lives, because we believe it gives us and our families security and a safety net. So with that, real estate's obviously played a massive part in that for sure. We were gold guys. We kind of still are a little bit gold guys. We do invest in Bitcoin. We like Bitcoin because, you know, and our belief is that it is a really solid asset over time. We don't trade it. We don't do any other crypto stuff, tokens. We're holding it because we believe it's going to be a good asset to own over time. And I know it's weird because it's the first real digital asset people are looking at. So that's really the areas that we play in right now. And, you know, it's so far so good. It's served us over time. But yeah, I'm not going to be here and tell everyone to go out into that space. But it is something that we play in, and I would just recommend to everyone to do some research there, make sure it's right for them for sure. Yeah,
a little bit of coin you're doing, a little bit of gold, but you're buying real estate, and that's your tortoise, if you will. That's you know, being able
100%.
Yeah, absolutely. Listen, Nick, thank you so much for being on the show with me, taking time out of your schedule. I know you're very, very busy. For those that are watching, the website's right there. Get educated, and people like Tom and Nick are great educators. Nick, thank you again for being on the show. Really appreciate it.
Always appreciate you, Rav. Thanks for everything you do.
Yeah. And thank you guys for watching. Without you, we would not have a TV show. Make sure you visit everydayinvestor.com. There you can sign up to our letter that sends out all different types of investment opportunities. Thanks for watching. We'll see you next week. Same place, same time. Honey, I love you. I'll be home soon.